Hello and welcome. You're watching us here on Halftime Report. I'm Mangalam Malu, with me Ekta Batra. And what an afternoon it is turning out to be for our markets. A 320-point gain on the Nifty. In fact, from lows that we hit earlier last week, the market's up by almost 700, 800 odd points. And that's the kind of move that we've been witnessing in just the last 3 trading sessions. And it's led by global factors as well as improving performance coming in from the IT pack. Hi, Ekta.
Hi Mangalam, yes absolutely. So let's see whether this momentum sustains or not. We closed last week on a 3-week high and it seems as though the US markets provided good cheer on Friday. They are closed today, but nonetheless, let's see. It seems as though there is some amount of momentum in place for our markets, up around 2% or 586 odd points for the mid-cap index. That really stands out. Sensex also up around 1100 odd points. But let's get going in terms of a couple of companies that we have lined up. It was a good quarter for AkzoNobel, the paint company, which recorded a double-digit top-line growth for the 5th consecutive quarter. Rajiv Rajgopal, who's the MD at AkzoNobel, now joins in to discuss their Q4 numbers. Hi, sir. Welcome to the show. So if you could just take us through this demand that you saw this quarter, just give us a sense in terms of where exactly this demand came from, the segments, and what are you envisaging going forward as well?
So good afternoon, Ekta, good afternoon, Mangalam, and good afternoon to all your viewers. First and foremost, delighted to be back. Yes, it's been, I would say, a robust quarter for us, the quarter gone by, where we reported a revenue growth of about 11%. I must say this is one quarter where the performances across all the segments, all our businesses, both in the paints and in the coatings, were strong. Of course, paints had a good double-digit growth. So did most of our coatings businesses. So all in all, I must say it has been fairly robust. Remember, we had a relatively weak January because of Omicron, but starting from the second week of February, till end of March, in fact, continuing till now, we've seen the demand fairly buoyant.
Right. We take that point, Rajiv, but before we ask you about the outlook for FY22 or the kind of things that you've planned for growth in your company itself, the big headline of last week in the paint industry was Grasim going ahead and increasing its capex program for the paints business from 5,000 crore to 10,000 crore. That would make it the second largest player in terms of capacity. That's one. Secondly, Kumar Mangalam Birla himself saying that they are eyeing to be the formidable number 2 player in the paints industry. In a situation like that, what happens to players like you, who have about 9 to 10% of the market share? A big competitor comes in. How do you manage to hold your own? Do you think that would cause some sort of a flutter, especially in the margins front, the positioning front? What are your thoughts?
So, Mangalam, great question. Firstly, look, it is a formidable company. So one has to take into account that it is a formidable company, and hence, we will accelerate some of the plans that we had already planned for. If you look at, our growth has been now sustained and double digit has been sustained for over 5 quarters. So I think we are working on a very clear strategy. Our intent as a team is to continue to leverage those strategies, drive the drivers of growth, and also make sure that we are keeping an eye on the rear view to look at in terms of what it is. Remember, the paints industry is slightly different. So if I were to look at, for example, another industry, say telecom, I do understand when huge capex come because the product is airtime. You would need such huge capex to sort of do it. In paints, you need to have a strong brand. You need to have a strong distribution. And I'm sure that, I've also heard the interview that they are planning to leverage some of the other businesses to try and drive it. From our perspective, look, over almost 3 decades, we maintained our position. And I think what really pleases me is the fact that we have a very clear strategy in place and we are driving that strategy. So yes, we will keep an eye on the rear view. But as they say, when you drive a road, you've got to look ahead and make sure that the plans that you've crafted are actually working. So we are going to continue on our process that we've already laid.
Okay, that point is taken now. But Mr. Rajgopal, in any industry, if there's competition, there's always prices which fall. And that's obviously the logical step that we could probably see for the paint industry as well. So in your sense, how much do you think prices can fall or reduce to? And do you think that that would be feasible as well, considering the kind of margin pressure the paint companies are facing in any case?
So first and foremost, we'll have to look at what is the sort of pricing strategy they adopt. Look, I don't think it will be possible for any paint player to start coming and hurting the bottom line of the parent company in which they operate, right? It will not be acceptable in today's world. If you look at us, we've been selling at a price premium of more than 3%, right? We were the first player to take a price increase starting August last year. And we've taken two price increases this year of 4.7 and 3% starting May 1st, right? So we are already ahead of the industry. So from my perspective, it is about how do you differentiate your brand? How do you make sure that consumers love the quality of the brand Dulux, which is the main reason why consumers vote for us? And how do we fortify certain segments? The way I do see it is there will be a lot of attack on the economy and the mass market. We've launched a product called Dulux Promise Smart Choice a couple of years ago, which has been margin accretive, and we've done very well in driving distribution through it. So again, I would like to repeat, we will obviously take cognizance and plan a strategy with all the announcements coming in. But I think we've already sort of incorporated part of it when we had announced our plans. We'll have to wait and watch what the pricing is going to be and then respond accordingly. We already have the highest stroke, second highest margins in the industry. And for us, the endeavor will be to see how do we make it accretive as we move forward.
About your business then, you said that you will accelerate your plans in light of new competition coming in. You have plans of reaching what, 35,000 distributors from the 20,000 that you've reached currently. By when does that happen? That's one. Secondly, you said paints is also about brands. Ad spends for you were 6 to 7%, and you expected to increase that significantly going ahead. So how much higher do they go from here? And in light of the investments that you're making in growth for your company and the ad spends that you're likely to increase, what happens to margins going ahead? Because raw material environment isn't particularly favorable, to put it mildly.
So Mangalam, first let me take the first part of your question, which is to say that, look, what about distribution? See, today we cover about 20,000 outlets. Remember that a few years ago we were barely covering 15,000. So we put a very strong strategy in place, which we call Distribution 2.0. And certain elements of that obviously is working, which is why we've been able to move it up and also add, subsequently tinting machines and make those outlets far more productive. That's a journey that we will continue for the next couple of years. I believe in taking one step at a time. So when I gave an outlet, a figure of close to 30,000, it's over a 3-year period, but I'd like to take it one step at a time and see how we are continuously building. 30,000 is a retailers, right? So which we will we are trying to cover and move hence also to a number 2 position. Remember, we are a number 4 player in the paints part of the business, which is what you allude to. So one step at a time is to move first to a number 3 player before we start looking further. Yeah. To the second part of your point, look, the industry itself during COVID, and you can look at the numbers, had dropped from about a 6% to about a 3%. So yeah, we had also, it's not 6, we had spent about 3%. We've already started pulling up. You would have seen very recently a Velvet Touch new commercial, Dulux Velvet Touch commercial, which we've got on air. We also put it during IPL. Our intent is to move this back and make sure that we get at least a 5 to 6% share of voice as we start moving in. For that, we also are trying to bring in certain products, formats, where we can speak to the consumer. A lot of it will also be digital, Mangalam, as we move forward.
Okay, just a quick last question from my side, Mr. Rajgopal. Industrial business is around 35% of your sales, and decorative is around 65%. Can you just give us a sense in terms of what is the growth rate in both these segments right now? What are you guiding for? What is your market share as of now? What are you guiding for in terms of market share? And are you putting more energy, say, into the industrial segment simply because there would be less competition there, say, once bigger hands enter?
So very clearly, both the businesses, as I mentioned at the beginning, grew double digit, right? So I think I must say that businesses, whether it's powder coatings, whether it is automotive specialty coatings or our marine and protective, all have really bounced back, and we've started seeing it. We are seeing a continuous uptick even as we move forward. In terms of margins, look, the coatings business works with a bit of a price lag. So when you look at us, we've taken about a 22-23% price increase. The coatings business are typically about 1 to 2 percent point lower than the average. That's largely because these are large contract businesses and they have a gestation period before the price gets adopted. And you will see that as we start moving it, it will become accretive. And I do not foresee that because coatings businesses grow, that we should have a dilution of margins as we move forward. Our endeavor is to try and make sure that we sort of win with customers. If you look at our automotive and specialty coatings, we serve consumers like McLaren, BMW with whom we've tied up, and a host of players. And we do think that our premium growth in the vehicle refinish business will also be strong. So also in our powder coating. To your last part of the question, yes, we will be ramping up capacities as we move forward. We already have a plan coming up in powder coatings, and even in our paints business, as and when we scale up volume, we are gearing for expansion.
Quick last question before we let you go, Rajiv. What is your market share at right now? You said 9 to 10% earlier. Have you gained market share? And what's your target? Because you want to be number 3, before you go on to number 2.
So, look, we have gained market share. I think it's evident. If you look at our growth for the full year is 30%. And, while I don't like to sort of browbeat it, because, we follow a process of moving one step in that.
Yeah,
journey.
we just want the number. Where does it stand at now?
Look, I think, if it's different for different business, Mangalam. So, if you look at our paints business, as most analysts sort of say, it's between 5 and 6. Our coatings businesses are between 15 and 16, right? At a net, we have added even in our paints business, at least, a 0.6, 0.7% point as we move forward. I think our intent very clearly, if you look at the last 5-6 quarters, is to start making sure that we add market share as we move forward.
All right, Mr. Rajgopal, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's AkzoNobel. The stock is up around 1.7%. There was a bit of a margin crunch, but revenue is up around 11% this quarter. We need to take a short break. Up next, we'll get chatting with the management of Lemon Tree Hotels on their Q4 performance. Stay tuned.